Well, let's get the latest business news now. And with jitters in the banking sector returning once again as lenders post their quarterly results, our business editor, Charles Pellegrin, is here to guide us through it.
Good morning, Sharon. We spoke about Credit Suisse yesterday and how it saw over 60 billion euros in capital outflows before its forced merger with UBS last month. And this morning, we'll speak about First Republic Bank, a regional U.S. lender. Now, exactly the type of bank that had been roiled by the collapse of Silicon Valley Bank and Signature Bank last month. They revealed today that in the first quarter of the year, customers pulled over $100 billion from their accounts in the wake of those bank failures. The company's leadership promised to restructure its balance sheet and cut expenses, for instance, by reducing its workforce by 25% in the coming months. Well, the bank saw a drop in deposits of $72 billion. That's a 40% drop since the end of December. And that's also taking into account the $30 billion lifeline the lender actually received from larger U.S. financial institutions like J.P. Morgan and Citigroup to shore up the whole banking sector. Well, the news sent First Republic shares tumbling in after-hours trading in New York. As you can see there, down 22% at $12.45 a share. And as we mentioned, the deposit flight at First Republic mirrors the capital outflows at Credit Suisse that we reported on yesterday. The capital outflow went in part to its rival, UBS, which agreed to take over Credit Suisse for the sum of 3 billion Swiss francs. In its quarterly report this Tuesday morning, UBS said it attracted $28 billion, about 25 billion euros of new money in the last 3 months, benefiting from clients at Credit Suisse switching their accounts. UBS also reported a 52% slide in profit as it increased financial provisions dedicated to settling a 15-year-old litigation in the United States. Now let's take a look at the stock markets now. Markets in Asia mostly trading lower, except for Japan, up over 0.1%. The Kospi and Seoul the Hang Seng in Hong Kong leading the losses, down almost 2%. Investors awaiting earnings reports from big tech groups like Alphabet, Amazon, Meta, and Apple, all expected to show their results later this week. For Tim Pagliara of Cap Wealth, though, the earnings of these groups aren't as important as the ever-growing place they end up taking on the indices that they are traded on.
You know, if you're an investor, that has increased the amount of risk that you have in owning an index, because the leadership has narrowed to about 10 companies that make up a big disproportionate part of the S&P 500 and NASDAQ. And so as they go, so does your return.
A group of Amazon delivery drivers and dispatchers in California has joined the Teamsters labor union. The move is a victory for labor rights organizers who've struggled to unionize the tech giant staff for years. Well, the drivers wear Amazon uniforms but are actually employed by a third-party contractor. The union said on Monday that they have tentatively negotiated new employment contracts with better pay and working conditions. And since late last year, a bird flu epidemic in Chile has forced authorities there to cull some 1 million chickens and other poultry. 700,000 of those birds are egg-laying, which has led egg prices to soar over 35% in the last year in Chile. This has caused the government to halt exports of poultry. Cases have also been detected in Argentina. Brazil, however, the world's largest exporter of poultry, remains free of the contagion. Chilean consumers, meanwhile, have had to change their habits. Take a listen.
I'm eating fewer eggs, so we'll see what's going to happen. Also, I'm eating less chicken meat. I don't know what that's going to be like. I've also avoided buying it because it scares me. I have grandchildren, and it would be terrible if something happened.
And finally, Netflix is going all in on South Korean content. The streaming platform says it will invest $2.5 billion in the next 4 years to produce more films, soap operas, and reality TV shows from the East Asian nation. This comes as the South Korean President Yoon Suk-yeol met with Netflix's CEO Ted Sarandos in Washington, D.C. during a visit to the United States. This investment is double what Netflix has spent so far and shows confidence in the soft power of South Korea, especially on the back of worldwide successes like Squid Game, or also the less gory, maybe you've seen it, Sharon, Crash Landing on You, which I really recommend to most people.
Lots to look forward to. I must admit I haven't actually seen either of those yet, Charles, but they're definitely on my list. Charles Pellegrin from our business desk, thanks so much for that.